Hello everyone, welcome back to Trade Calls. So in this particular video we will be discussing about the indicator strategy and how we will be placing trades using the indicator strategy. So it's quite important. So let's begin the video. In order to make money from trading, you need to focus on 6 points, which are price action, trade execution, indicator strategy. Then comes the few other strategies beside the indicator strategy, risk management, as well as trading psychology. All these points are quite important, and as I said previously, we will focus on indicator strategy and trade execution. So in price action we have seen all these important points we have learned in our course, the candles, candlesticks, and few other important patterns. And in trade execution we have learned about how to place orders, stop loss targets, and trailing stop loss. And in this particular video we will be seeing about indicator strategy, the combination settings, what are the rules, limitations, accuracy, everything will be covered in this particular video. And in few other strategies which we have learned, such as the option strategies, breakout strategies, 920 strategy, these all strategies we have learned in the course. And the trading psychology, this is also quite important. And then the risk management, how we manage our risk, capital, and everything, that also becomes an important component of trading. So let's begin the video with indicator strategy. So here we have applied the indicator to the Nifty chart, and you can see the settings here. Window size set it to 500, bandwidth should be 8, and multiplier should be 2.5. So you can see multiple signals over here. At 9:30, around 9:30 we got our first signal. Let's mark it. And then around 10:30 in the morning we got another signal, and beside it you can see a continuation signal, same signal, so we need not mark it. And at around 11:30 again, in the above you can see there is a signal that price will go down. Let's also mark that. And after that, the last signal of the day was around 2:15 in the afternoon, so let's also mark that one. So now we got 4 signals in on that particular day, and we will be seeing how we will be taking trades, how to execute, how to place stop loss and everything using the Demat account. Now any broker you must be using, I'm using Zerodha here. You might be using any other broker. The process remains the same. So for this first signal, let's take Nifty 19,800 put. Let's go to the chart. Time frame should be 1 minute here. There the time frame was 3 minutes. Here the time frame should be 1 minute. Search in the indicators super trend, apply it to the chart, and change the settings to 14 and 3. The defaults can be anything, you change it to 14 and 3. So now you can see the super trend is applied here. The red lines are the breakout or entry levels, and the green lines is the stop loss. Okay, so we will be taking an entry when the red line breaks. So here you can see when the signal was generated, the price was around this level, around 80, but we won't be taking entry here. We will take an entry only when the price crosses the red line. The red line is at 98, but in order to avoid the false breakouts, we place the order just 2 points above it, which is at 100. And what is the stop loss now? The stop loss would be the green line. The green line, once the red line breaks, we will see a green line that becomes our stop loss. But since here the green line and the swing low are almost same, we can consider the swing low as the stop loss here. I'm again repeating this. The green line is our stop loss in normal cases, but since they are almost same, we are taking the swing low as the stop loss. Just 1 point difference it was there, so the swing low becomes our stop loss in this case. So the entry is 100 and the stop loss is 86. And now you can see once the entry is made, it made a high of 132. The risk was around 12 points and the reward was around 34 points, which is more than double the risk. So we have seen that the first signal was a hit, we got profits. And now let's look at the second signal. The price will go up. So here you can see it was generated, the signal was also generated near the support zone. I'm calling it support cause it was near the previous day closing. So let's see what happened here. Let's open Zerodha again, select 19750 the call option chart, and here you can see when the signal was generated, the price was around this level. Again our entry should be the red line. Okay, so 93 is our entry. 93 is our entry level, and the green line becomes our stop loss. So let's mark the stop loss also. So here it is around 83, 82. Okay, so 83 is our stop loss, 93 is the entry, and 83 is our stop loss. So 10 points risk we are taking here, and once the entry is made, it made a high of around 146. So here you can see it made clearly a high of 146, which is more than 50 points. So here we are getting 5 times the returns. I mean 1:5 risk reward ratio. So the second signal was also a hit. Now let's look at the third signal, which was generated around 11:40 something. So again open the Zerodha. Again repeat the same things. We just have to open the chart. Super trend and everything is already applied. So here you can see the price consolidated for more than an hour. So applying the 30-45 minute rule, the 30-45 minute rule, when the signal generates and doesn't get active within 30-45 minute rule, we can avoid that particular trade. But if you're saying let's take the trade, we don't want to avoid these moves or miss those moves, then you can see our entry is at 62, and here you can see the stop loss is again near the swing low. Let's mark it. Here you can see this is the green line and this is the swing low. So these are almost same. So here you can take the stop loss as 53, the swing low as the stop loss, and there you can see it went up a bit and then hit the stop loss. The green line is our stop loss. You can see you can keep on trailing or you can keep the same stop loss, and here we get a small stop loss hit. So the first and the second trade gave us more than 1:2 and 1:5 returns, and in the third trade we got a stop loss hit. And in the afternoon you can see there was another signal generated. Similar thing you will keep on repeating. You don't have to change anything. The same process. See the signal, go to the broker chart and use the super trend for entry and exit, for taking the entry as well as for the stop loss. So now let's look at how to place these orders, which is quite important. So here you can see, once you go to the Zerodha chart, you mark where is the entry and exit. So in that particular chart we have seen that the entry was around 76. So in the trigger price we have to place 2 points above. Trigger price should be 2 points above the red line, so that becomes 78, and the limit price becomes 80, and then we have to just swipe and place the order. So remember, whatever the entry price it is there, that becomes our trigger price, and 2 points above becomes the limit price, and we will place the trade accordingly.